What's up, everybody? Happy GTC Day, NVIDIA Day, whatever you want to call it. Tomorrow we got FOMC. Today was a total wash. Just chop, 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 like we were watching the show Chopped. Anyways, I'm Max Pitts, your host of Trades and Gains, and we're here for another market recap. So, buckle up because the market decided to come out and just get wrecked. We had the Nasdaq down nearly 2%. The S&P 500 smacked for 1.1%. The Dow, it's not safe either, with it currently being down 0.6%. Now, by the way, Nvidia, brutal 3% plunge. I have my own thoughts on this that I will share in a minute as to why. But the worst quarter for big tech is currently happening in over 2 years. So what's going on right now? We've got tech stocks crumbling like a stale cookie, or like Crumble Cookie's reputation. The Fed is looming like a shadow over Wall Street, like the Grim Reapers just waiting for us to all die. And options flow is screaming, the selling ain't over, folks. The fat lady has not sang. The roasters ain't come to crew. Whatever you want to put it as, the blood is still coming, all right? So let's break it all down. Where's the big money betting next? Because that's always a smart way to move. Who's loading puts? And is this just a dip or the start of something so much worse? Let's get into it, folks. So, Nvidia, tech stocks, Nvidia got wrecked, baby. It just got wrecked. There's no other way to put it. This was supposed to be its big GTC AI conference moment. Jensen Huang was up there on stage talking about AI reaching an inflection point. And Wall Street was just not impressed with this attitude. The stock tanked over 3%, wiping out absolute billions in market value. Now you're probably wondering, why did this occur? Now, for one, AI fatigue is very real. Nvidia's valuation is absolutely sky high, and traders are getting spooked that maybe, just maybe, AI stocks can't go up forever. And you have to also look at it like this. You have Meta, who's going to start experimenting with their own independent chips so they can back off with their reliance on Nvidia. You have Google, who is working with an Asian company now, MedTech or something like that, to lessen their dependence on AI chips from Nvidia. So the fatigue is real. Like 5 companies spent $44 billion and now they're backing off spending. That might be a little bit of a red flag here, folks. And that's one thing you need to think about. This same thing, go look what happened with predictive analytics and see what it became today. It's going to be the same thing with AI. It's really hot, it's really sexy, it's really exciting, but once you get into the actual meat and potatoes, aka the practicality of it all, a lot of it is just for flash and for quick cash. It's not really producing anything and it's not really benefiting anybody. So it's going to be the same. It's going to be a very interesting, because a lot of Nvidia's architecture and talk today was for the future. Nothing really for the immediate, like when they introduced Blackwell. So it will be very interesting. I will get into a deeper dive on that video separately, but that's just my 2 cents. I will step off my soapbox. Now, we also had some heavy put flow hit the tape today as well. We saw millions dumped into Nvidia puts, especially around the $110 to $120 strikes. Dark pool prints suggested institutions aren't buying the dip on this either. In fact, they might be getting out or offloading shares at this point. But Nvidia wasn't alone. Tesla got absolutely obliterated, down another 6%. China's BYD just announced a new EV that charges nearly as fast as a gas car. It's a 1,000 kilowatt battery or something like that, or charging station, and it basically in 5 minutes would give EVs about 240 miles. So, hey, shout out BYD. That's a death blow to Tesla's narrative, by the way. And big options flow here, huge put activity at the $200 and $180 strikes. And Apple, they are not safe, folks. They lost another $700 billion wiped out from its market cap in just a few months. Morgan Stanley just slashed their price target on them. Trump's tariffs are adding billions in costs. And the AI strategy is just absolutely crumbling like a cheap piece of underwear. This just ain't profit. This isn't just profit taking. This is big money making an exit. Now let's go ahead and move over to Investor Central Club so we can talk about what happened in the options market today. I hope you're all having a great day today. What do we think is going to happen in FOMC tomorrow? I think we get a rate pause. I don't think we're getting a cut this year. I don't know. A cut doesn't make sense. Like, it just doesn't make sense at this point. But anyways, we're moving on to our IC trades for the day. So let's go under the hood and check what smart money is really doing out here. So first things first, SPY and QQQ. We had over 31 million in overall volume on SPY today, with 24 million in puts against 7 million in calls, with our most common contract being the 555 puts expiring for the 21st of March. So yeah, you gotta do with that information as you will, folks. And then QQQ, we had 9.25 million in total volume today, with earned total premiums, with 3.1 million in calls against 6.14 million in puts. And it absolutely was getting nuked at this, I think it was the 450 level. Yeah, the 450 level, 455 level, expiring on the 28th of March. Institutions are hedging hard for more downside. That's what that flow is telling me right there. And then if we take a look at Nvidia's flow, that stuff was uglier than catching your two sisters kissing at the family reunion, folks. We had 31.45 million in total flow, with 11 million in calls against 20 million in puts. If we go ahead and look at our most common strike for Nvidia here, it was the 122 put expiring on the 21st. And yeah, it's just not looking good for him, boys. In dark pool prints, there were 1.4 billion in block trades below market price. So that means people are definitely expecting more downside. And the translation is someone big. A whale is definitely getting out of their Nvidia position. So it might be time to pay attention. Now, Tesla, they weren't safe either, with also a unbearable flow and very bearish flow as well. The $200 and $180 puts are absolutely stacked on each other right now, boys. Let's go ahead and take a look at our Tesla puts, boys, and see what we're looking at here. So, like I said, we got Tesla. As we can see, we got 20,000 against 21,000 in calls, but we got 14 million in put premiums against going against 8.94 in calls. So bearish flows outnumbering bullish by nearly 5-1. Dark pools show 850 million in off-exchange selling, and no one, absolutely no one, not even your sister wants to touch Tesla right now. That believe that, right? And other notable plays that we saw, by the way. We saw ARKK with huge put buying. Cathie Wood's flagship ETF is now a magnet for short sellers. And we also had Meta, which was a mixed bag. Some big call buyers stepped in, but the dark pools say otherwise. This is not a healthy market. These are institutions hedging for more pain and downside. Now, the big jabroni, the big kahuna for tomorrow. We got the Fed meeting with our boy Jerome Powell and the gang, right? This is the biggest wild card of the week, folks. The Federal Reserve. Powell and co. start their 2-day meeting, and the rate decision, mic drop, drops tomorrow, folks. Will Powell give the market a lifeline, or is he going to sit by and watch the world burn? Should be interesting. Now, here's the dilemma. Inflation well above 2%, and we need it to be at 2%. GDP growth is slowing fast. If you remember, Goldman Sachs slashed their GDP forecast from 2.4 to 1.7. And Trump's tariffs are adding even more economic uncertainty. Markets are pricing in rate cuts later this year. I think it's up to 3 currently. But if Powell comes out hawkish, the sell-off is definitely not done and will just resume as normally scheduled programming. So hawkish Powell equals more tech bloodshed, and dovish Powell equals short-term rally, but nothing is sustainable in this current market. Smart money is positioning for volatility either way. Now in the dark pool data, this is where the big money's hiding. We had SPY with massive off-exchange trades over $1.7 billion at the $560 level. We had Nvidia see a flurry of block prints below market price, and Meta and Tesla have tons of dark pool selling going on in the background. And what this means is institutions aren't panic buying this dip. They're quietly getting out while retail FOMO is in. Dark pool data never lies, folks. If smart money isn't buying this drop, why should you? Explain. Now, where do we go from here exactly? On the short term, the market could see a small bounce if Powell plays it soft, but options flow says more downside is coming. And on the long-term front, tech stocks are in serious trouble here. Nvidia, Tesla, and Apple, they're all on the chopping block. Institutions are betting on pain for all of these guys too, and these are the market makers, so keep that in mind. Some key levels to watch here are SPY needs to hold above 560, and if it breaks, watch out below. And Nvidia 110 to 120 puts are stacking up, and that is a very dangerous zone. QQQ must hold $450, otherwise we're going to be heading lower. And my final thought here is if you're not tracking options flow in dark pool prints, you're absolutely trading in the blind and the dark. Big money already knows where this is going, so pay attention or absolutely just pay the price. Anyways, I'm Max Pitts. This has been Trades and Gains. Like and subscribe for more market breakdowns, and drop a comment. Are you buying this dip, or is the pain just starting and are you going to short? Let me know. Hope you all have a great night. I will see you in the next one.